Hello and welcome to this edition of India Revival Mission. I'm Nayanthara Rai. Today I have a very special guest with me. It is Sumant Sinha of ReNew Power, who has made headlines for a massive listing directly at the Nasdaq via SPAC. We're going to understand more from Sumant Sinha himself, who's joining us. Sumant Sinha, a big congratulations. You know, we've had lots of unicorns talking about how they're going to look at the SPAC route, etc. But along came ReNew Power. It has done it. We're talking about an $8 billion deal and a merger. Can you tell us a bit about it?
Yeah, sure, Nayantara. First of all, thanks so much for having me on the show, and thank you for your congratulations and good wishes. Let me say a little bit about the transaction. So we are actually technically merging with a SPAC called RMG Acquisition Corp 2, which had $345 million of cash with them. In addition to that, over the last month or so, we've been talking to investors. And as you know, with all of these SPAC transactions, there's always another additional component of capital raise called the PIPE, which is also involved. Which is really a private fundraising transaction done directly with investors. So we've been doing that. And we've raised $855 million through that particular part of the transaction for a total of $1.2 billion. And basically, of that $1.2 billion, the company is being valued at $4.4 billion of equity value, $8 billion of enterprise value. And a couple of months from now, when the deal closes, we will then be listed on the Nasdaq under the ticker symbol RNW, standing for ReNew.
When are you going to ring the bell? Do we know when that's expected at the Nasdaq?
You know, Nayantara, I would love to do that. As you know, that's one of the aspirational things that every entrepreneur likes to do. These are, we're living in strange times. However, this is a virtual world. But hopefully, I think once all of this is behind us in terms of COVID and so on, then perhaps sometime this summer, once the deal is closed, hopefully then.
So by the summer, you're hoping that the deal will be closed. Now, Sumant Sinha, I want to understand from you, why did you go down this route of a SPAC merger? Yes, it's been making a lot of waves globally. In fact, one of the biggest advocates of this, Chairperson, is one of your investors, is backing the SPAC, all of that. I want to understand from you why you went through this and not what most of us in India usually read about, whether it's an equity raise, an IPO. Why a SPAC?
Well, Nayantara, for us, the important thing really was to get a listing done. And, we were looking at various markets, of course. We were hoping that the direct listing route might come through. So we were looking at various options, but it was the natural thing for us to do in terms of the evolution of our company and to provide exit to some of our shareholders. So the question really was, which market should we look at and how should we list in that market? So when we were looking at various markets, obviously we came to the conclusion that perhaps the US market, with its really strong theme of ESG investments right now and its very deep and liquid pool of capital, might in fact be a good market for us to access. Now, then the question became, okay, what is the right way of doing that? In the normal course, you would have done an IPO, which would have taken, the usual time that it would. Now, in the context when we started looking at the US market, and there was some degree of reverse inquiry, several SPACs approached us and said, would you consider doing a listing through us? And, when we looked at the whole process, we found that in fact, it was a very credible alternative path to getting a listing done, which really was our end goal. And so therefore, we decided to go down this path. And I must say that it moved very rapidly. We got really good partners as our SPAC partners. And, the whole process took maybe a couple of months at most to consummate. And so here we are. But our end goal really was to get a listing done. Whether we do it through a SPAC, whether we do it through a direct listing really was less relevant to us. We also saw was that last year, almost half the listings that had happened in the US market actually happened through SPACs. And so therefore, the SPAC process and route has now become a very viable way of getting to the public markets. And so I think that's really why we decided to go down this path.
Sumant Sinha, I'm going to ask you to do something a little basic for all of our viewers. Not all of them maybe familiar with the SPAC. How would you explain it? And would you say that just wanting to IPO is a good enough reason to do a SPAC?
Yeah, so let me just explain how a SPAC works. So what happens typically is that a few sponsors get together and they go to the public market in the US. They raise some capital, typically in the range of between $200 and $400 million. And that company what is now called a SPAC, or a special purpose acquisition company, then gets listed on either Nasdaq or whichever other stock exchange that they choose to list on. So now you have a company that has a certain amount of capital and that has the stock that is listed. But really it's trading on a notional basis because all it has is cash as its only asset. And so it trades mostly at par. Then depending on the sponsor of the SPAC, depending on what their investment thesis typically has been, they look for companies that are looking similarly to get listed in the market where they are listed already. And so there's a coming together of minds between the company and the SPAC. The SPAC then says, look, I already have this much capital. Is this what you require, or do you need more capital than this? And typically companies would say, look, I need another 100, 200, 300, whatever amount of capital they require for their primary and secondary purposes. And that extra amount of capital, let's say if the company needs 500 and the SPAC has, let's say, 250, then that balance $250 million, then both the SPAC as well as the company jointly approach institutional investors in the US. And there's a fairly well laid out process for this to happen. Those investors then engage in conversations with the company and the SPAC investors, decide if they want to come in or not. And if they do decide to come in, then that part of the transaction is called the PIPE process. And so between the PIPE and the SPAC, the company then gets access to this pool of money, which is then what the company ends up getting for its primary and secondary purposes. And then once all of this is done and the deal is announced, as it has happened in our case, the company then files with the US SEC certain registration statements. And once those are approved and all the other regulatory approvals have been obtained, then you go through what is called a de-SPACing process, which is nothing but the technical merger between the company and the SPAC, at which point in time the SPAC gets renamed into the company and the company starts trading on the stock exchange under its own ticker symbol. So it's just a different way of getting listed. I would not say that it is, it's now become very common. And unlike in an IPO where you file with the SEC and that takes a few months and then you do the marketing process, in the case of a SPAC, you first do the marketing process, build the pot, build the capital that you're looking to raise, and then you file with the SEC. So it's a little bit of a different process, but the end result is the same, which is that you've raised capital and you've got a listed stock at the end of it.
If I take out data, and this is data as of February 25th, in 2021, we've already seen SPACs raising more than $45 billion. In 2020, a record $82 billion had been raised via the SPAC route. Do you think, and you're a stalwart of Indian industry and you get it all, do you think this is the way that Indian entrepreneurs will also go?
I think it's a very credible path to becoming a listed company. It's another path. I would not say that it is the only path. You can still do a regular way IPO as well. But I think going through a SPAC where you then have the sponsors of the SPAC as your partners, who then stand side by side with you when you're talking to US institutional investors who otherwise may not know very much about India or about the Indian business, I think it certainly helps. And so therefore, if you get a really good partner in the form of a good SPAC, who can also tell your story credibly, who has good standing with US institutional investors, who's also done diligence on your company and is able to relate that to US investors, I think can be very important. Certainly was in our case because, we were in fact the first SPAC out of India. And so therefore, a lot of investors did not know the Indian market very well. And so having a sponsor of a SPAC who could say that, look, I understand, I've done diligence, I spent time with the company, and so on. I think that does have value. Going into it, I must tell you that one of our biggest concerns was whether US institutional investors would be familiar enough or comfortable enough investing in large amounts in a in an Indian company or in an India-only company. And so in our case, of course, that question was answered very strongly positively because of the demand that we saw. But it may be different in different sectors. And so I think there is certainly merit to going down this path. Now, it's not, I think, that every company can do this. I think you need to have a certain degree of size and scale. In our case, of course, we're a mature company. We had EBITDA, we had cash flows, all of that. So that obviously helped us as well. So I think it'll really depend on each company. There are also, of course, significant regulatory issues to be looked at. So I think I would advise every Indian entrepreneur who wants to consider this to really get good advisors on board and make sure that you look at all the regulatory aspects, look at all the market aspects, and then take a very considered decision whether this is in fact the right market and the right way to access that market for you.
I'm sure you read Charlie Munger's recent note on SPACs, what he's had to say, that it is just a bubble. Coincidentally, of course, this interview came on the same day as your announcement. But there are a lot of those that are worried that this could just be another bubble, that investment bankers will sell whatever can be sold as long as there are takers. I'm sure you've done all of your homework. There are equal reports out there which show that those that went through the SPAC route, their valuations are now lagging those that went through the traditional IPO route. Is there merit in that argument?
I think, there are two different parts to it, Nayantara. One is the process that you follow, and the second is the product that you sell as part of that process. Now, following a SPAC process to become a listed company, I think is just an alternative regulatory way to become listed. I think there's no issue with that. The issue is the kinds of companies that are going public through the SPAC process. And I think that is where, some of the statements around bubble and so on, I think are emanating from. I don't know whether they're fully justified or not because, I haven't personally analyzed a lot of the companies that are going through this route. But certainly, I think that's where the concerns are emanating from. Where I think a lot of different kinds of companies that don't have a lot of existing business, a lot of their value creation is in the future. I think that is really where this concern about bubble and so on is emanating from. I think if you look at our company, we are a solid company. As I said earlier, we have cash flows, we have an installed business of 5.5 gigawatts of capacity, and we're a hard infrastructure, renewable energy company. So in that sense, we're quite different from most of the other companies that have gone to the public markets through the SPAC route. And so I think that is really how I would differentiate our situation compared to some of these statements that are being made about some of the other companies perhaps that might be going public through this mechanism. But the process of going public, I think that's just a regulatory process more than anything else.
Okay. You said Renew Power is a solid company. It's also one that has solid backers. Goldman Sachs, CPPIB, Abu Dhabi Investment Authority, all of them. What happens post the listing? Do they stay on as shareholders?
Yeah, so Nayantara, what happens as part of this deal is that the existing shareholders, some of them, sell about $500 million worth of their Renew stock to new shareholders who are coming in. But even after that, the existing shareholders of Renew will continue to own 70% of Renew stock after the listing is done. So they will continue to be very substantial holders of the company even subsequent to the listing. So Goldman Sachs, for example, which owned 48% of the company prior to this listing process, will still own 30%. And ADIA and CPPIB, which held in the high teens, will hold in the mid to low teens in terms of their own equity ownership of the company. In addition, what happens is that through the pipe, there'll be public market investors that will now come into the company. And of course, similarly through the SPAC, new investors will come in. And those new investors who are investing, as I said, $1.2 billion of capital, will be getting a total of 30% ownership in the company, or approximately 30% ownership in the company. So that is how the equity ownership will pan out subsequent to the listing.
You're talking about an enterprise value of $8 billion. Tell me, post this SPAC listing, the listing at Nasdaq, which will hopefully happen by the summer, what can we expect from ReNew Power? What are the plans?
I think good things. Look, we are in a sector that is growing very rapidly. India's power demand itself is growing at about 5 to 6% a year. So there will be a lot of new power demand that has to be met from various sources. The natural way for that to be met is through renewable energy. Now, because renewables on a fully unsubsidized basis is fundamentally much cheaper than any other form of power, whether it's coal, hydro, nuclear, etc. And so therefore the default capacity addition in the future in the power sector in India will be renewables. And the government itself has set a target to get up to 450 gigawatts of installed renewable capacity by 2030, up from the current 90 gigawatts that is existing right now. So we're looking at a 5x growth in renewables over the next 10 years time period, which is really, really immense. It's very substantial. Within that, ReNew, of course, as you know, is playing a leading role, and we intend for this to continue to happen. And we have approximately a tenth of the market share. If all goes well, and of course, business is always volatile. If all goes well, hopefully that market share continues, and we continue to be very substantial players and very substantial contributors to India's clean energy transition.
So you will stay focused on India?
I think for the near term we will. I think the Indian market opportunity is just so vast that there is no real need for us to look elsewhere. Of course, from a point of view of diversification, and if there are interesting opportunities that present themselves in other geographies, we will certainly look at those opportunities. But I think within the power sector itself, there are many new things that are going to happen. The government is talking about delicensing of the distribution sector. There are many other areas of the power sector, such as the ancillary markets like batteries and storage, or even things like green hydrogen that are going to open up. I think all of those will be very interesting opportunities for a company like ours to look at in the future. And we hope to play a role in really decarbonizing and deepening the electrification of the Indian economy going forward.
Sumant, the green wave, if I can call it that, has really picked up momentum, right, since 2020. Look what happened with Tesla and Elon Musk. In India, we're talking about electric vehicles picking up. Amazon and Flipkart have made big announcements for their fleet. But if I could talk to you about green energy. Now, this is also a sector which was picking up pace, but there were challenges. For example, the auctions that took place, what happened with solar power and all of that. Have those problems been addressed?
Nayantara, there are, I would say not fully. There are, of course, issues at all points in time in any business that you do. There are comparative challenges, there are regulatory issues. So some of those issues are there. And, as they come up, we work, I think, collaboratively with our peers in the industry. We engage deeply with the government and with state governments, and we try to find solutions for those problems. And I think by and large, so far, the whole ecosystem of people working in our sector, including fundamentally the government, we've been able to do a fairly good job at finding those kinds of solutions. And I think even going forward in the future, as those problems arise, I think we'll be able to find the right way to go forward. You're absolutely right that we have a lot of unsold power capacity which has to be sold. And there are a few other issues, of course. The government is trying to move towards domestic manufacturing. So we have to make sure that transition that happens is seamless and smooth. And I think, of course, this is India after all, so there will always be some issues around execution. Those are things that we have to deal with on a regular basis. So I think, it's nothing unusual. I think these are standard issues in any industry, in any sector. I think we are fortunate that we have a central government that is very supportive of our sector and that has really taken it upon itself to really push forward the growth of renewable energy. And I think that is a very, very big positive for us, all of us operating in this sector.
But this is also a sector which relies a lot on China, just simply because of, let's say, the solar panels, the equipment, all of that. It's not Atmanirbhar. Your suggestions to the government, have things started changing on that, at least for procurement?
Well, we're not Atmanirbhar yet, Nayantara, but there's a lot of work happening in the government on trying to move in that direction. And so there are a few things that are being planned. First of all, there is the announcement of the production-linked incentive scheme, which is meant to encourage the domestic manufacturing of solar panels. I think once that industry gets set up, we can look to really curtail our dependence on China and reduce that substantially. So I think you'll see a couple of years down the road a very different environment where we hardly import any solar modules from China. And I think that will be very positive because, our plans in solar are vast and we can't simply, depend on another country, particularly one with which we've had geostrategic issues, to keep importing from them, billions and billions of dollars. So I think the government's effort to move towards Atmanirbharta in solar manufacturing in general is absolutely correct, and we must do that. All of us in the industry are looking at setting up capacity for manufacturing. So I think there will be, the dependence will get reduced very quickly. On the wind side, I should tell you that all the wind turbines are manufactured totally in India. In fact, India has now emerged as a good export hub from where turbines are exported to other parts of the world as well. So I think we can definitely emerge as a manufacturing hub for renewables, also for storage, batteries, and I think, and really broad base the industry, not just on the generation side, but also on the manufacturing side. I think it's a unique opportunity for India to capitalize on.